Welcome to Pressure Points. Our topic today is a preview of Nvidia earnings. It's significant, needs no enumeration here. I'll just jump right to the pressure point. And surprisingly, it's not about what they're going to report and what the guidance for the October is going to be. It's about commentary on the call we're going to get from Jensen about when they will reach supply-demand equilibrium. And this dynamic is going to essentially solve for all of the timing issues of what's going on with Blackwell, whether that's delayed or not, and ultimately speak to what the underlying demand is for their chips. And I think this is, again, the pressure point. The language that Jensen used when they reported the January quarter, so this is called February of this year, was that they expect to be in equilibrium at the end of 2024, an end of the year. And then 3 months later, and when they reported their April quarter, he said that they believe that demand will outstrip supply well into next year. And so that's kind of the benchmark right now, well into next year. I say well into next year is probably through the first quarter. If, for example, Jensen gets on the call and says we'll be supply-demand constrained through the end of this year, that's a big negative. If he comes out and says mid-next year, I would view that as a positive. If he comes out and says we'll be supply-demand, we'll reach equilibrium into next year, basically uses verbatim the language that he used 3 months ago, that's probably a directional negative, just because the sense is that this continues to gain momentum. The stock's higher today than it was 3 months ago, and therefore that bar about when they reach supply-demand equilibrium should be higher. My sense is that he probably will use pretty similar language well into next year, because there's some interpretation about what well into next year means. That could cover through a couple months or could cover 6 months. And I think that just the broader sense that investors will take from that is going to depend on what your view of AI is. If you're a skeptic, you're going to say that his cadence on that topic hasn't changed, therefore it's a negative. If you're optimistic, present company included, Deepwater is a shareholder of Nvidia, our sense would be that that's still positive, and well into next year could mean mid next year. And so that's the pressure point. I'm going to step back and talk about some just kind of housekeeping items around the quarter. Street's looking for around 117% year-over-year growth. I think this is for the July quarter. I think it's probably going to be closer to like 125%. As far as commentary for the October quarter, expectations are that they are going to raise. And I think this is an important topic. The whole raise conversation is all related to what's going to happen with Blackwell. If they say that Blackwell is delayed 3 months and they don't raise, they maintain, I would view that as a positive. If they say Blackwell is not delayed and they don't raise, that's a negative. And so the biggest positive would be that they raise by, let's call it 5% for the October quarter, and they say Blackwell is delayed. That is kind of their nirvana for the stock, because despite the fact that they're sitting right in front of the Osborne effect. I mean, if you're a hyperscaler and you're buying these chips today, you're buying it in front of what is going to be a product that's going to be 3 times better with Blackwell. And so I think the Hoppers, the fact that they're still showing strong demand, if the guidance does reflect that in front of what's going to be a much better product, I think is evidence about the intensity of what is going on in terms of the CapEx build-out related to AI. And so the simple takeaway with the guidance is just it's got to be in context with commentary around what's available for Blackwell. Biggest picture, we believe that the cost of missing AI is so significant that not only the hyperscalers, but also as you move down to application providers, industrial, sovereign AI, all of those are going to continue to be investing in aggressively with Nvidia. There really is no competition. If we fast forward in terms of what next year and the year after look like, the street's generally looking for about 100% growth for calendar 24. That drops down to, call it high 30% growth for calendar 25 and down to 16% for calendar 26. And ultimately, I believe that the numbers are going to be better for next year and for 2026. And so I think that they can grow 50% in calendar 25 and probably closer to 25% for calendar 26, something in that range, but kind of still measurable upside. And my general takeaway is that this growth will be higher for longer. On behalf of Pressure Points, we'll be back after they report the quarter, so stay tuned.